I have already indicated that I did not consider the original proposal coming from the Basel Committee a particularly good one for the European economy and the European banking sector. Keeping that in mind, I consider the agreement on the transposing on the CRR review to be quite satisfying. We managed to strike a good balance between sticking to the international rules and making smart adaptations to reflect European specificities. In some instances, however, we have only gained time. For example, when it comes to the treatment of unrated corporates, I mentioned it. With the transition regime, we have solved the problem for now, but not forever. So it will be paramount to make good use of the transition period. We also need to keep a close eye on how the Basel finalization package is implemented in jurisdictions outside the European Union. In the past, we have seen that some countries take a lot of leeway with the implementation, which could undermine the objectives of creating a level playing field. And this is an area we also need to keep an eye on and, if necessary, even adjust our own approach.
We are talking about finishing the Basel III. Usually it's used that, okay, it has been 16 years since the crisis, 20 years to get implemented. If you go to 32, it's going to be more years. But I think that we should keep in mind that this, at least for banks, this is not the end of the story. Not at all. This is quite just beginning because we have to implement this in parallel with other packages, for example, on the digital world and ESG world, also huge packages. But more importantly, there are a lot of technical development to be made, particularly from the EBA. The EBA have 140 mandates. And then once you have the regulatory technical standard, we don't have to forget that we have supervision. And supervision is also in charge of applying these new tools and having regular reviews. And it's also is going to be a challenge and also a new responsibility for banks and also for the supervisors.
And another point I wanted to raise with Mr. Ferber is the issue of proportionality. Now, thanks to Parliament's efforts, we shouldn't forget, a regime for small, non-complex banks for the net stable funding ratio has emerged. But this innovation in banking supervision in Europe by introducing a bifurcated system, one set of rules for the large banks and one set for the smaller banks, has not been followed up in terms of substantive law standards except for some adjustments to the disclosure rules. Now, there's a reason to suppose that a uniform application of certain new rules in CRR3, and to me in particularly the new operational risk management rules stand out, is going to impose disproportionate burden on many of the smaller banks, in addition to all the adjustments that need to be made for the application of the revised standardized approach rules for credit risk. And the example of the new risk weighting approach for corporate lending is a nice example in real estate as well.
I mean, I would certainly add one point. This is a question I thought about when you look into this whole matter, is certainly the level playing field issue. I mean, you have been also very critical about the original Basel document from 2017. And in other jurisdictions, namely the US, I mean, there has been a big debate about the implementation of these international rules. I mean, I even read that the banking lobby even issued commercials in football games against the implementation of Basel, which I've never heard of, that you run commercials in football games for a banking regulation. So there is a really strong push against that. And Jay Powell has already said there will be some review of the original draft from the Fed. How do you see the whole thing if it's completely unknown what is the outcome in the US when it comes to the implementation of that right now?
Yeah, I will start with the first question of because of course from 2017 till today we have seen that Basel made a lot of new proposals which are not implemented yet. The only one we took up a little bit and asking after this transition regime for a special regulation beyond the MiCA was dealing with crypto assets, which is a Basel paper as well. We got some other special papers from Basel during the negotiations. Some of them we tried to implement as well. Some of them we refused to implement. But in general, that shows that on the one hand, Basel has to improve its work. If they start now with nitty-gritty papers on an annual or biannual phase or period, I think neither the way of transposing it in the US or the way transposing it in the European Union is sufficient. So we do it by legislation. Americans more do it by implementation via SEC and CFTC, via the authorities, and not with Senate legislation. But even for that, you need empowerment from a Senate that the authorities can do that. And therefore, we really have to rethink firstly Basel, and as I said, for us Europeans as well, how we present ourselves in Basel, because I had really the feeling the 2017 result was more an US solution than a European solution, and addressing a lot of problems to us, but not to them. But even though we see that they have problems. And of course, we have to be aware that we are in a campaign year on US level. So CRR, CRD did not play a role now, and as we are going to vote it tomorrow, it will not play a role in the campaign for the European elections, but it plays a role in the US election campaign, and the president and the candidate from the Republicans have made statements about what to do.